Hey guys, welcome back to the channel. Hope you were doing well. Today was a double whammy for markets. First, the US economy shocked investors with a job report that no one was expecting. Then oil prices skyrocketed and jumped because of the geopolitical crisis that's happening right now in one of the most important energy chokeholds on earth. Growth was down, energy was up. That's the exact combination markets fear the most: stagflation. Today's video, we're going to talk about all of it. We'll take a look at how the index has performed. We'll jump in and take a look at what is happening right now with oil prices and the fear that's out there in the market. We'll, of course, take a look at Micron's performance today. What does it mean? Why was it affected so much from the sentiment today? But there was a winner today. And what will that winner tell us, or what could it tell us about AI demand, AI infrastructure build out, and why the markets are shifting that way? And finally, I'll just give you my thoughts as we head into the weekend, the way I'm feeling, and I'd love to hear from you guys what you're feeling and thinking right now as well. So drop it in the comments now or at the end of the video. But if you haven't hit like and subscribe already, just do it. Appreciate the time that you spend on the channel. We're growing the base of listeners. It's awesome to see. Let's keep it going. But let's dive in first and take a look at what we saw in the markets today. So I'm going to dive over and just take a look at Yahoo Finance just to show you a couple things that jump out. Number one, all three of our indexes were down. So I said double whammy at the beginning, was actually a triple whammy if you want to talk about the indexes. So we saw the S&P was down by just about 100 points. You can see in the far right corner over here, I'll circle it. S&P down almost 1.5%, 100 points off. We had the Dow was down almost 500 points today, over 1% down. And the NASDAQ was down, we'll call it just over 350. It was 361 points to be specific, just over 1.5% down. But I want to draw your attention to the middle of the screen, because this was not just a US specific sentiment or negative performance in the markets. Look at the indexes across both Americas as well as Europe and Asia. This was a macro event that was happening across all of the major markets and all of the indexes, and we know why. Operation Epic Fury is affecting many other markets beyond just the Americas markets and just the US market. It is having a significant impact on markets everywhere, and we see that volatility that is happening overall. If we jump over, I first just want to show you the VIX. Remember, I said a couple days ago, we need to keep the VIX, or the volatility index, under 20. That's a great sign that fear and anxiety in the market is kind of calming down. Well, today, it's hit the highest that it's had since the beginning of Operation Epic Fury. You can see we closed over a 24% increase in the VIX today. You know, almost a 5-point growth, called almost a 6-point growth. It closed close to 29.5. This is a significant sign of the fear and anxiety that is happening and that is growing, because what is happening, and I think there was some comments earlier this morning by the administration, by President Trump, saying that this conflict or this war will not stop until there's an absolute surrender from Iran. That drove more uncertainty in the market as well. The markets want to see an end of this. They want to see kind of the conflict and some certainty in the market. But as President Trump mentioned, this will not stop, and the U.S. and Israel will not stop until we have a complete surrender from Iran. It just shook the market, and you can see it drive up in the volatility index, and you could see it drive up in the oil prices as well. So you can see on your screen here, so just crude oil measured by the West Texas Intermediate. This is a 52-week high in this index. You know, up over 12%, almost $10 on the board. This index hitting over, you know, almost $91, reaching a 52-week high. Another very scary sign, we'll say, for volatility in the market. This is going to drive and continue to drive significant uncertainty in the market right now. And so I think that's the piece that is the environment that we find ourselves in right now, the environment that we hoping our stocks and our market can perform. So just down overall. And then I mentioned it earlier around in my opening about a jobs report that hit this morning too, which also added to more of the fear and uncertainty in the market. So about 8:30 this morning, the Bureau of Labor Statistics dropped the report that we lost 92,000 jobs in February. That is a massive reversal from January's growth. That's right. I'm going to say it again, 92,000 jobs down. It was the February non-farm payroll report, down by 92. It was a surprising decline overall. We also saw unemployment tick up to about 4.5%, 4.4% to be exactly. So jobs are disappearing in the economy right now. Gas prices are skyrocketing. The crude I just showed you was up 10% today, $91. And just remember that every $10 increase in oil acts as a tax on the global economy. So this has significant impact overall. And then we talked about the Strait. We have been talking about the Strait of Hormuz, and it's grinding to a halt. We know we mentioned the U.S. giving insurance, but the shipping is grinding to a halt there. There was a great interactive map on the Wall Street Journal. If you haven't taken a look at it, they showed you all the traffic that is moving through the Strait prior to Operation Epic Fury and what the traffic looks like right now. And you can visually see with your eyes of just the volume of ships that have just come to a grinding halt. And on top of that, we heard news today that Kuwait is cutting production because they have nowhere to store their oil that they can't ship right now. This is stagflation we're seeing right now, folks. In real time, zero growth, high inflation. And on top of all of that, there was another article that came out again, and I think this had an impact on Micron and had an impact on a lot of the tech sectors, a lot of the companies within the tech sector. And so there was a report from the Department of Commerce, essentially, that the U.S., the administration wants to move to a license, a country-by-country license for the export of chips. So Washington reportedly is moving to require NVIDIA and AMD to get a government license for every AI chip export, regardless of the country that they are planning to export them to. This isn't a China-specific focus anymore. It's not just about China. It's now shifting and moving to a more of a global AI sovereignty. And so the Trump administration, according to the report, is reportedly working to tie chip exports to U.S. investment. If a country wants 200,000 GPUs, they may have to prove that they're investing in U.S.-based data centers or infrastructure first before they can get those GPUs. And due to that, we saw pressure for both NVIDIA and AMD today. NVIDIA was down 3%. AMD was down 3.5%. I think this was the fear that the market is now realizing that the TAM, or the total addressable market for GPUs and chips, just got a massive red tape from the U.S. government. And this is not only just affecting the chip makers, it had a spillover to the memory players today. I'm going to talk about Micron as a indirect, or how they got caught in the crossfire for that. So let me pull up Micron just so we can ground ourselves on the performance today first and foremost. But you can see on the screen, Micron was under a significant amount of pressure today. So the stock was down we'll call it $27, almost 7% per all. Micron became the pressure valve in the entire semiconductor sector today. It closed significantly down. And so when macro risk rises, geopolitical risk rises, oil spikes, weak jobs, the first place that institutional money takes profits is the high beta AI names, and Micron is one of them for sure. We know the parabolic run they have been on. There is profit built into the stock. So when we see this risk and the volatility and the fear and anxiety in the market, big money typically moves to take profit from these high beta names first. And right now, as I mentioned, Micron is one of the key stocks that sit at the center of that trade. And we talked about yesterday that we saw strong buy ratings, price targets moving up. I mentioned in my video yesterday with that big, massive closing cross that I thought would be a floor. So why the $27 drop today? Three major reasons, I think, why the sentiment changed today overall. One is the geopolitical risk aspect that I spoke to. Memory is the most sensitive of supply chain companies, or any shock to the supply chain. And if the Strait of Hormuz stays closed, shipping costs for silicon wafers and finished modules will explode. They'll rise dramatically. It has risk for companies. Second, I think, is that export friction. Like I said, Micron, it got caught in the crosshairs of this new export rule, because if NVIDIA can't ship their H200 or Rubin chips freely, then other countries or companies may not need to buy Micron's HBM3 or HBM4 product because of the inability to get those chips and the cooling and the slowing down overall of the demand. So Micron is facing collateral damage from the export war right now for sure. And then I think the last piece was just a bit of a concern around the jobs report, concern around inflation overall, that the average consumer isn't going to be buying laptops and phones. And so will we see an air pocket of demand in traditional consumer products? Will traditional DRAM products or DRAM demand start to slow and we see a bit of an air pocket in that demand? But there was something that most retail investors missed today. I think, as I mentioned to you in the beginning, there was a winner today. There was a sentiment change overall. And while the market was selling off, we saw pressure on so many big names today. The biggest institutions were positioning for something very specific. It wasn't software. It wasn't consumer tech. It was AI infrastructure. Companies that are actually building the plumbing of the AI revolution. That's what won today. So let's talk about the bright spot of who we actually saw as a winner today. I'm going to pull that up for you right now, and we can jump back and just kind of look at their performance. So today's biggest winner is a company named Marvell. You may be familiar with it. It's a smaller company, about an $80 billion market cap, so not as big as some of the big players, but 18% growth today, $14 growth overall, kind of pushing towards over $90 a share. It was the bright spot in the overall market today for sure. The reason why is they had their earnings. They reported revenue of just over $2.2 billion, which beat expectations. Their data center revenue beat expectations as well. It was up 21%. It was at a $1.65 billion. They told the street that they have visibility into $100 billion in AI revenue. So we think, if you're not familiar with Marvell, I'll give you a quick overview of what they are. If we think of NVIDIA as the brain of the AI, Marvell is the nervous system. So they don't make chips, but they make high-speed pipes and connectors that allow those brains within the GPUs to talk to each other. Without Marvell, an AI data center is just a room full of expensive, lonely computers. Plus, Marvell just proved that their new connectors are compatible with NVIDIA's Rubin architecture. So they aren't just planning to win today. They've actually set themselves up and secured a spot at the table for the next cycle as well. And, we know there's a big shift. We've seen it with the hyperscalers to build their own chips. They don't want to buy off-the-shelf product or chips anymore. They want to build their own. We've seen that with Amazon, Microsoft, Google. Marvell is an excellent partner here as well because, they are like a world-class mechanic. You hire them to help you design and build those custom engines. This is why Marvell is winning. Even if a company stops buying from NVIDIA, they still need Marvell to build their own stuff. So you see the difference, and I'm going to jump back, but you ask yourself, why did Micron, another memory player in this AI build-out, AI infrastructure, why did they go down and a company like Marvell go up today? And it's clear. Micron is a commodity in the market. If you think about it, like any time for us as our consumers, Micron, I will compare it to, it's like milk or gas. When there's too much of it, the prices crash. Marvell sells a specialty. Their technology is a patent-protected surgical tool. You can't just buy a cheaper version somewhere else. So today, what was clear on the market, that investors and big money ran away from commodities like Micron and other companies like that because the economy is shaky right now. But they ran towards specialty companies like Marvell because the AI build-out is still a must-have, not a nice-have in today's market. Marvell is proving, and today their performance proved, that the AI build-out is still happening, even if the economy is shaking overall. So finally, I want to tell you what I'm looking for this weekend. So a couple things. One is, I think we have to recognize that holding the positions that we have over the weekend is going to have risk this weekend. Brent oil is already at 91, and we are one headline away, guys, from that spiking over $100 a barrel. If the situation in the Strait of Hormuz escalates while the markets are closed on Saturday and Sunday, the market uncertainty will significantly escalate. We could wake up Monday morning to a massive gap down in tech and a vertical spike in energy. That's just the situation we find ourselves in right now. Until this conflict is over, that is the environment that we are operating in. That's why we have to continue to ignore the noise, look at the signals, and just be patient and not let this environment and this volatility shake us with weak hands and make us lose our position in companies that have such strong fundamentals and are positioned to win. So the other piece we think about is the Federal Open Market Committee. They have a meeting on March 18th, same time as Micron's earnings. I just realized that. March 18th, will the Fed cut rate? Will they Fed cut rates to save the job market or stay high to fight the oil-driven inflation? We'll have to see what they're going to do, but they have to balance both of those two. It'll be an interesting decision by the Fed. And then finally, I think my last thought that I would have is we just cannot confuse a bad week, a bad micro day, because we had a little bounce this week, so I won't say it was a full bad week. A bad micro day today confuse that with a bad tech cycle. Today was a preview of the next phase of the AI cycle. So governments are fighting over chips. We have that global AI sovereignty I mentioned. Oil is spiking because of war, and the global economy just showed us its first real crack. We saw the red across all of those indexes. The question for us as investors that we have to think about is simple. Who controls the infrastructure of the next technology revolution? What companies will those be? Because if we can understand that, if we can identify those companies, we will understand where the real money is rotating to, and we'll put ourselves in position to win. Hope you guys enjoyed the video. Have a great Friday night. See you soon.